I'm Daniela Cambone, and you are watching In the Lead for the week of May 16th. Morning, John.
Good morning, everyone.
Johnson Matthey putting out their big platinum group metals report today, and they're saying that the platinum market has been balanced in 2010. They're also projecting 975 palladium and 1900 platinum by year end. That's pretty much in line with what other firms such as GFMS and Standard Bank have projected. Any surprises in this report, John?
It seems, well, in the context of the sort of forecasting season, which spring generally is, between April and June, we get the statistical findings on supply and demand, pretty much from everyone, GFMS, CPM Group New York, now Johnson Matthey has chimed in. As regards the noble metals niche, consensus seems to be that the three metals in that group are well supported on the demand side, that perhaps downside risk, albeit still there in the price in the context of generalized selling that we've seen in other metals and commodities, is still there. But the downside risk is fairly limited because the basic equation shows that supplies are not all that robust, and that the demand base, the automotive makers of the world, continue to require these metals essentially for building cars, without any excuses of waiting or substitution. So the Standard Bank projections, in addition to that, would basically serve as the corollary and corroborate the projections that, yes, we could see as high as $1,900 or $2,000 in platinum before the year's out, perhaps as high as 900 to 975 in palladium before the year comes to a draw. And on the downside, support seems to be fairly robust in platinum at around the 1550 to 1650 area, while in palladium, that support is probably between the $600 and $700 range. So there's still some volatility to come into these markets. They've always been notoriously, large movers. But all in all, the optimism is there because basically South Africa and Russia are not supplying at levels that are all that encouraging to people. And as I said, the car makers continue to demand these metals.
John, you touch upon Russia, and throughout the year we've heard about this tremendous shortage of palladium coming out of Russia, but the report is indicating otherwise.
Oh, yes. In fact, we heard several times that there was no palladium coming from Russia from sources. And I think our friends over at CPM Group in New York had disputed such findings on and off throughout the year, alluding to the fact that, look, the stockpiles, although unknown in size because Russia keeps those a state secret, are probably still there, and that at the right time and the right price, Russia will release some metal to the market. And apparently the flows have been on the order of about 1 million ounces of palladium last year from Russia. So there's no cessation of the flow, no turning off of the faucet. And we can expect probably the same large, not large necessarily, but the same consistent levels of sales to the market from that source in the current year as well.
John, if we turn our attention to silver now, last week we saw the metal in a downward trend. Will this continue throughout this week?
Hard to say to what levels on the lower end, although we've seen projections that allude to support emerging possibly at the low $29 level, perhaps lower than that, around 26. I think the basic lesson to be learned is that the latecomer speculative crowd has learned a difficult lesson in silver, and that is that you don't necessarily chase bubbles and you don't necessarily enter at the top in a panicked mode. Clearly, the wipeout from just about $50 to even the current levels in the 31 to 33 range are damaging enough for people who were trying to ride the trend that was already quite mature at the time. So I think the best thing we can say about it is that volatility will continue in the metal, that perhaps long-term holders of silver as sort of an insurance component in addition to gold shouldn't really fret all that much. Because ultimately they didn't probably buy it for gain rather than, as opposed to protection. But yes, it does raise questions for the speculative-minded crowd as to, where do we go from here, and what can we expect? Because on a fundamentals basis, I think it has been, repeatedly revealed that silver probably more fairly priced or fairly valued somewhere between, $20 and $30 maximum.
John, in other leading headlines today, India's inflation rate falling to 8.66% in April. This is down from 9.04% in March. However, it's still above the central bank's target level. So does this mean we'll see higher interest rates over here anytime soon?
Inflation is a case of, where in the world you might find yourself at this point. We see a bit more benign levels in the US at the moment, which is part of the reason that the Fed is apparently not in a big hurry to hike interest rates. They believe that the commodity price inflation is transitory. On the other hand, if you're in India and you see inflation levels, gyrating around the 9% levels and hurting the economy and, of course, consumers, there you have had a clear case of 7 consecutive interest rate rises by the central bank in the last year, perhaps an 8th one coming soon because April's inflation numbers have been really not very good. China, in the same paradigm, I think they've seen undesirable levels of inflation, and the PBOC has now hiked reserve requirements for banks several times, and it looks like interest rate hikes might be in the offing in China as well. Finally, we come to the ECB, which clearly had to contend with rising prices and has already hiked rates in April. Consensus seems to be among analysts that come June, we will see another increase from the ECB as well. At the end of the day, the Fed probably will not permit, if you will, inflation levels to get out of hand in the US either. And it's a question now of timing and magnitude that the departure from accommodation is clearly coming. We just don't know exactly if it'll be summer, fall, or perhaps before next winter is over. The key concept to bear in mind is that it is, in fact, a trend that is global, and it's coming to a theater near you as well.
John, finally, everyone loves a good scandal, and the IMF is certainly providing one these days with the arrest of its chief, Dominic Strauss-Kahn, under sexual allegation charges. John, could this in any way impact or hurt the IMF?
I think not. I mean, at the end of the day, policy is policy, and the IMF's function is not likely to be impaired. Especially not in an environment where we still have, various financial brush fires to put out around the world and credit issues to lay to rest. So, change in management, yes, that's probably in the cards in the wake of this scandal, if you will. But, it's at the end of the day not going to alter what the IMF does and how it does it. It might have more of an impact on the upcoming French elections, if anything. On that same note, you still see some eyebrow-raising headlines here and there. Just this morning, I read a piece about the U.S. Heritage Foundation proposing the sale of U.S.'s gold reserves in order to solve the budget deficits that the country is facing. And this is the most conservative think tank you can think of in the U.S., one that has always espoused, free markets and limited government and very conservative approaches to fiscal and monetary policy. So if anything, this is an organization that should have recommended quite the opposite, i.e. less loading up on a lot more gold than it has. Curious headlines continue to make the headlines, and we just have to cope with them as they come.
Excellent, John. We'll see you again next week for another edition of In the Lead.
Indeed, we will.